All right, Bulls and Bears, hope you're doing well. We're back with another dose. BX4 News, bull to the bus. Let's go ahead and get right into it here. We got a lot of news, economic situation here to get caught up on. The economy continues to be propped up on spending, but we're seeing massive changes in how much is being spent. And also, with the cuts currently taking place and all the layoffs taking place, are we on the verge of a major financial transformation? Are we on the edge of an economic cliff right now? Well, I think some of the stories we're going to get into today are going to shed some light on that. And I've got some data, statistics, recent news to get into. And let's go ahead and start right here. Mobile food banks are closing in Mississippi. There's over, I believe, 12 of its mobile units are going to be closing. And folks, the skyrocketing costs and the funding behind this is drying up. Right? So you have a combination of skyrocketing costs of food, the funding for these programs and many others are drying up because of the cuts, because of the new scrutiny on where all this money's being spent, right? With all the audits happening right now, everything else we're seeing, folks, we're on the verge of a major shift in the economy, folks. And it's already been shifting. We see the wealth have now accumulated the biggest portion of assets that we've ever seen throughout history, folks. We've never seen it worse than we are today. And we just came out, a week ago, we saw a report that said the top 10% account now for 50% of all GDP. That's gross domestic product, and that's based on spending. So the top 10% basically looks like they're propping up the economy. We know that they're buying a lot of the homes. They're doing at least half of the spending now, according to that study. But let's go ahead, though, and get into some other information because there's some news I wanted to get into today that's going to shed some light. I think where we're at right here. Americans delay home improvements in latest blow to U.S. housing market. So people are really, I think, cautious right now. We did see the biggest drop in many years in January in consumer spending. So people are seeing what's going on, and I think they're anticipating a major shift in the economy, like everything that's happening, like we've been talking about here. But it seems like this would be showing up. If Americans were really pulling back on home improvements, seems like you would see this show up in Home Depot. Home Depot stock, let's go ahead and bring up a 5-year chart right here. And Home Depot stock still looking pretty strong, 396. So over the 5 years, it's up about 73%, so nothing major. If you bought the stock back then and held on to it, you're doing pretty well. But are we on the verge of a shift? If Americans are really pulling back on home improvements and we're seeing the volume of homes sold near record lows. In fact, it was a 50-year low. I'm not sure if it was an all-time low, but home sales have plunged and the volumes are so low. You have to ask yourself, how are these loan officers, real estate agents, people connected to the real estate industry, appraisers, etc. And now Home Depot, you'd think Home Depot should start seeing the repercussions of this pullback in home improvements and also the sales, but it's still being propped up somehow. A lot of it's just consumer credit, people spending money they don't have, borrowed money. And that gets us to the next chart here. The amount of borrowed money is off the Richter scale, folks. Let's bring up a chart right here. Here we go, folks. A recently updated chart here of total household debt. And take a look at 2008 over here, where my cursor's at. And look how much more debt we've accumulated now. And this is what it's all about, folks. When people can borrow money, then prices are going to continue to remain inflated. The cost of living is going to continue to go up. And we're seeing consumers borrow money. We're seeing corporate debt explode. Government debt continues to explode. So until we see a dramatic pullback in either one of those types of accumulation of debt, we're likely not going to see a very big drop in the cost of living. You might see corrections here and there, and we're going to talk about rents here in a few minutes. We're seeing some corrections in rents, but overall, we're still seeing, these asset bubbles, the housing market. A lot of these things are still remaining inflated. We also are going to keep a close eye on the stock market. How much of this money that's now being closely monitored was ending up in the stock market, and all this money that was sent all over the world, how much of it was coming back to private interest and was ending up in the stock market, right? So it's something we're going to keep a close eye on here. The stock market showing some topping patterns, and is the topping pattern we're seeing in the stock market a coincidence, or does it have some connection with the new scrutiny that we're seeing on how all this money, these trillions of dollars, are being spent out of the United States? We have what, $4.7 trillion they're finding now is unaccounted for. And it's going to be very interesting to see. But I think there's definitely a connection. Maybe I'm wrong, but I think there's a connection. That's one of the reasons why I'm remaining very cautious right now until all this plays out, until we see some of these audits and everything else kind of unfold and see where everything is. When everything's laid out on the table, we're going to see the truth about this. Here's something here. NPR: oil companies double down on fossil fuels after years of touting their shift to green energy. So now with the current administration, we've got a complete 180. Now we're going back to fossil fuels and dumping the green energy. And we're seeing a lot of people talking about selling their electric vehicles and already selling their electric vehicles. It's pretty interesting. So will this all just flip back again in 4 years with the new administration? If the economy crashes under this administration, I think people are going to want to go back to the other side in the next 4 years, in 4 years from now. And then all this could be reversed, folks. So how crazy is this flip-flopping, this 4 years of this, 4 years of that, everything gets shifted. All the things that are happening right now could be reversed in just a few years. So, folks, this is why I've checked out of the entire political system, if you want to call it that, because it's a game of this side versus that side. And what it does, it takes your eye off of the real cause of all this, right? And this all goes back to the system of money, folks. But hardly anyone realizes that. Maybe the people here on this channel, but most people don't realize that this all goes back to the system of money. So will the people in power right now, dependent on the creation of money, still continue this scrutiny on the way that money's being spent? I mean, I think they should. I think this whole thing should have came crashing down years ago. I think most of you probably agree with me on that these bubbles, these prices here, just look at housing, record unaffordability, but yet prices are not correcting because there's always new money coming in. Plus, we have a lack of homes being sold. Somehow homeowners are still hanging on there. Even though the costs are outrageous now to own a home, homeowners are still scraping by and still hanging on because they know the alternative, which is renting, is also very difficult. And let's talk about rents right now. Let's talk about get into some corrections here that we're seeing in certain markets. Certainly not everywhere, but certain markets are seeing some price corrections and some big ones. Let's go out to Texas here. We've got Austin rents tumbled now 22% from their peak. And part of this was a massive home building spree as people escaped certain areas in the coastal cities after 2020, looking for a lower cost of living, looking for a different lifestyle, but now down 22%. So investors that bought homes to rent out, a lot of them might be feeling some pain from this, but as a renter, this could actually be looked at as good news if for people that do pay rent. And what they're saying here is that nearly all apartments in Austin are doing some sort of specials for move-ins. It normally would have cost about $14.20 per month, but in return for applying after the day of her visit, the leasing, she received 2 months free rent. This is a story about someone that was apartment hunting. 2 months free rent. They waived the administration fee and the credit check and application fee. So there was a town that once was booming, and now we're seeing some price corrections. A lot of people went to Texas and definitely into Austin, Texas. And what it looks like here, the response to all the new influx of new people coming into the state of Texas caused them to overbuild. Look how many apartments were completed in 2024, about 30,000. And compare that to the previous years, it was about double of what you saw from 2018, more than double, from 2018 to 2022. So they overbuilt. And now we have this overall economic slowdown. Consumers tapped up, loaded out on debt. And it's a combination that's going to lead to, I think, declining rents in other cities besides Austin. And we also have some reports out of New Jersey that rents are coming down in some areas as much as 12%. And this was inevitable. We usually see rents come down first because that's where people have to have the money from month to month. And when rents start coming down, then you know things are changing, things are shifting. So we're going to keep an eye on this and see if these rent declines are going to be widespread or if it's just going to be limited to a few different areas. Now, on a larger scale nationally, rents are also down, not as dramatically as the two examples we just showed you previously, but the median rent's now $1,370 as of January of this year. We look at the chart here, we see at one point it had gotten up to about $1,450. So overall, it's down. Some areas more than others. Of course, 22% in Austin. That was one of the biggest drops that we see here right now in rents. But this is going to continue, just the opposite of what we saw all the way back to 2018, where rents were up every year, year over year. They started to come down after 2020 shortly, but then skyrocketed back up with all the inflationary policies that were put in place after that crisis. All right, but then you get reports like this, just came out the 6th, which was few weeks ago. Logistics real estate rents drop in U.S. and Canada in 2024. So we're also seeing this rent correction in more than just residential real estate. And remember, we're seeing a pretty dramatic change now in consumer spending. In fact, delinquencies just hit a 5-year high. So a lot of things adding up. We're not saying it's going to drop off of a cliff tomorrow, but I think people that are looking for some sort of change or shift in the economy and the cost of living, I think you're going to be definitely in for some surprises coming up over the next, I think, just a few weeks, not even a few months, just in the next few weeks. I think we're going to see dramatic things unfold. All right, still on the topic of housing, here's one that caught my eye. Oakland landlord won't let legally blind, as I adjust my glasses, won't let legally blind senior back into home despite overturned eviction. So the court overturned an eviction because this lady is blind, it sounds like, and the landlord's still not cooperating and not letting the person back into the home, right? So on one hand, you've got a lot of people that say, yeah, disabled people, they should get free housing because they can't work like everybody else. Other people say, well, if you do that, then you're going to see a lot more people pretending they're blind, and you're going to see a big uptick in people that say they're disabled if you give these people free housing, right? So I can kind of see both sides of this. I don't know who's right or who's wrong, but it's pretty interesting that the landlord is just going to ignore the court filing. So it seems like they're going to have to be in legal trouble right now if they don't let the person back into their house. I'm out on the street, they said. I'm not going to survive, said Gary. Okay, I said she, sorry, he. Gary Gilbert, 67, who walks with a cane and has a host of medical ailments. He says, quote, I'm just scared, my mind is racing, and I just don't know what I'm going to do. My health problems make it so I can barely get around. All right, a lot of people would also look at this and say, we have people here that have lived in the United States forever. Shouldn't we prioritize these people with housing? I mean, for those that believe that there should be this housing assistance, if you want to call it that. Shouldn't we prioritize people that have been here for decades versus a bunch of new people coming to the country, right? All right, we've got the Fed out there with some words of caution. What are they saying? They're saying tariffs will raise prices. It's just a matter of how much? That's the Atlanta Fed. Are they correct? Or are some of these things that we're seeing, this spending that's now being looked at more closely, the pullback in the spending, the shutoff of some of the spending, a lot of the spending, will this be deflationary, right? So will the tariffs maybe be inflationary, but then you have deflationary forces on the other side, so it could keep things sort of level. I don't see an implosion. I see kind of things kind of balancing out. I could be wrong, but there's a lot of things happening right now, a lot of things to try to factor in to try to figure out exactly what's going to happen. Nobody knows exactly what's going to happen. Just, I would say, be aware of all this information, be defensive, be cautious, but at the same time, look for opportunities. I mean, there's still massive opportunities out there. Some of my investments just went up big time just in the past 48 hours. And I'm glad I didn't sell off, everything. I still have some investments that I'm holding, but I am waiting for a much bigger shock to the economy, so to speak, a much bigger correction. I think a lot of us are right in thinking that some sort of shock or big correction or rapid economic downturn because of a black swan event. I think a lot of us are correct in thinking that it's long overdue, and there's definitely a lot of risks on the table right now. Wall Street Journal came out and said they crashed the economy in 2008, Now they're back and bigger than ever. Wall Street expects to sell more than $335 billion in asset-backed debt this year. So will that be the pin that bursts the bubble, or are the banks just going to continue to be considered too big to let go under? All right, let's talk about Wal-Mart. The CEO came out and said food prices are causing frustration and pain. He says he sees a noticeable shift in the way consumers are spending money. They're getting smaller portion sizes, they're buying less. And of course, we saw that report came out that said consumer spending took a big drop, one of the biggest drops in several years. So people are feeling the pinch, and now you've got a lot of other things to add on top of that we won't see the numbers on until maybe the next month or the month after that, as far as these spending cuts and what kind of repercussions these are going to have with spending, the cost of living, and the overall economic picture. Also, still talking about the Fed here. This is out of CNBC. First quarter is on track for negative GDP growth, and that's out of the Atlanta Fed. Well, we know that GDP is pretty much a scam, right? Because the more you can borrow money as a country, as an individual, then the better the GDP number is going to look. So I always talk about, I don't always, but when it comes out, I talk about it. When it's in the news, I talk about it because it's a number that everybody looks at. But I think all of you aren't buying it. If you've been on this channel, you're not buying the significance of the GDP. Yes, it's an indicator of how much money was spent. But remember, it's mostly borrowed money that's spent. So is that a sign of a good economy when GDP goes up? Well, when you look at GDP go up, you always see debt go up. And that's no coincidence because we know how GDP is calculated. 50% GDP collapse ahead. Actuaries sound the alarm. Who is listening? A financial reckoning is coming. This is out of Forbes. Coming. A financial reckoning is coming. For years, climate scientists have warned us of rising temperatures, extreme weather. Now they're calculating financial risk. Actuaries sounding the alarm. Latest report projects 50% collapse in global GDP. So are they realizing what's happening? Do they see the massive pullback in the way money is just being sent out without any accountability? And do they realize, like I've been saying here, to maybe this could be a factor, that this money that's no longer going to be sent out without any accountability isn't going to bring a big change and shift in the economy? I think so. And I think that's why these actuaries are kind of looking at this and saying a 50% collapse in GDP is ahead. All right, and on top of that, we've got the administration coming out there saying they may not even include government spending in GDP. So you see how they're trying to maybe skate around the way that these financial numbers are reported because of everything that's happening right now, folks. So one more thing here before we get out of here. On a bit of a lighter note, I guess. Somebody says, I went broke because of Autopay. What I wish I had done differently. So people are setting up Autopay for different subscriptions. Maybe it's a streaming app where you listen to music and you pay a monthly fee. Maybe it's a TV app or a streaming app of some other sort. Autopay for insurance. And I've heard cases where people are on Autopay, they switch insurance companies, but they forget to take their old insurance company off of Autopay, and they forget to tell their old company that they want to cancel because they have new insurance, and they end up spending double. They end up doing double payments because they forgot to shut off the old one or turn the old one off or cancel the old one. And basically, this person says they went broke. This is out of Go Banking Rates. You going broke because of Autopay, folks. Simple. Look at your statements. Look at your transactions. I pull up my transactions every few days because so much hacking is going on out there, so much fraud, people's cards compromised, information compromised. Look at all the data breaches. I check mine every few days. I don't just wait for the monthly statement. I'm online checking literally every few days. And I try not to use too many different credit cards. There's people I know that do 4, 5, 6 different credit cards. You know, certain cards for this, certain cards for that. This one's all going to be medical. This is a business card. This is my grocery card, so they can keep all their accounting and all their spending categorized. But that's more you have to check up on. If you really want to follow what you're paying, I mean, I would recommend having just maybe 1 or 2 cards that you use, and hopefully you can pay it off in full each month. But look at your transactions. Don't forget about these things that you have set up on Autopay. And, imagine paying for something for years and you forgot you had it and you never used it, but you've been paying for it, right? Pretty ridiculous. But I guess Americans are too busy and too distracted to see what they're really spending their money on too distracted to look at their own bank statements, I guess, their own credit card statements. Anyways, everybody, what do you think about this? What do you think about the plunge in rents in some of these cities, 22% in Austin, the spending cuts, fireworks, folks, are starting to go off already, not ahead of us. They're starting to happen right now. And I think we're on the verge of something really big. I'm going to go get some coffee, folks. I'm tired today, so slurred my words a lot today. I apologize, but thanks for being here. Big love, as always. Let me know down in the comments what you think about this. Keep stacking, everybody. Keep stacking. I'm serious. This is the time to stack. Big things ahead for sound money, silver, folks. We're going to talk about that in the next report and a lot more. But thanks, everybody. Bye for now.